4 companies plan to spend the GDP of Sweden in 2026. Check out this chart by the FT. It's not even how much they're spending in CapEx, it's the rate at which they're ramping it up. We're talking about a 340% increase over the last 3 years to about $660 billion planned for 2026. Let's talk about 2 of those big spenders, Google and Amazon, in the final part of our earnings rapid fire series. First, Google, the big tech stock of 2025, has plateaued over the last 2 to 3 months. Right, but how were Q4 earnings? Good. They reported $114 billion in revenue, representing 18% growth and a 9% beat on expectations. EPS also beat, coming in at $2.82 versus $2.62 expected. It feels like yesterday we were just outside their office anticipating their first $100 billion quarter, and today we're already 15% higher. Not sure how you don't like this company. They're in the sweet spot of using AI and selling AI. YouTube is doing insanely well. Google Cloud grew at 48% year over year. Search fended off threats to its demise from ChatGPT, and then there's the whole full stack approach to AI, from chips to data centers to models and applications like Gemini. And if that's not enough for you, you can toss in Waymo and an ownership stake in SpaceX. Okay, speaking of plateaus, Amazon stock hasn't gone anywhere for like 2 years. Okay, we know a lot of you guys are betting on it breaking out this year, so listen up. This company has a lot of work to do. AWS has been pulling them along, and having worked there, I can tell you firsthand, that's where the money and the brain power is at. They were already losing a cloud battle to Google and Microsoft. Then the tech landscape shifted to AI, which they were hardly first on. Now they're trying to go full stack AI, similar to Google. For example, Jassy has been talking up Trainium, their new custom-built chip for AI workloads. Overall, the street was unimpressed by earnings. They came in with $213 billion in revenue, a less than 1% beat, and EPS actually missed by 1%. If you take that and you combine it with the planned $200 billion in CapEx, biggest of the Mag 7, the stock ended up sliding about 8%. Any bright spots? Yes, they know they need to change and they're working through it. And as an investor, there's limited downside risk right now because the PE is historically low. They're also leading the charge in space technology. Check out Amazon Leo, which could be a really strong long-term play. And lastly, Anthropic has been on fire lately, so their ownership stake and relationship there might help slingshot them towards the front of the AI race. As always, thank you guys for watching. Appreciate you all in the Wall Street Game Notes community hanging out this earnings season. Be good.